Thank you. It was a wonderful presentation, and I must tell you that the reason why I wrote Dossier Baghdad is because I couldn't get anybody to publish a book about the economics of terrorism.
Excuse me, can you put the microphone closer to you?
Yes.
Thank you.
Is it better?
Yeah.
Sorry, I'm short.
It's okay.
So I was saying that I wrote that thriller because nobody wanted to publish a book on the economics of terrorism. So I had to write fiction. So that's the reason. And unfortunately, it is in Italian. So unless you want to go on a crash course, you won't be able to read it. Anyway, well, I must thank the university for inviting me to this lecture, and also Christine for calling me and asking me to be the keynote speaker. I must say also that we are not responsible at all about the credit crunch, linked to the title. The credit crunch was going to happen anyway, even if this series of lecture was going to take place at another time. So let me begin by telling you what happened to me just a month ago. A few days before the credit crunch started, I was giving a lecture in Italy, and at the end of the lecture somebody asked me, what would be different today if the Berlin Wall would come down? And my answer was, absolutely everything would be different. For a start, we would have an alternative system to capitalism to follow. A mix of Islamic finance and Chinese economics, which of course did not exist in 1989. And then a few days later, Lehman Brothers collapsed, and it looked like another wall was coming down, a major event, which was the melting down of the Western financial system. And while I was giving another lecture, somebody asked me another question, which is very much what is different today from 1929, but even from 1989. And my answer is identical. I mean, everything is different. I mean, we do actually face a new reality because we do have an alternative system which did not exist in 1929, nor did they exist in 1989. So, how does this relate to Islamic finance and what is happening to us? And this is basically the topic of my lecture. I will take you through the causes, consequences of this crisis, and eventually, to the end, I will discuss how this alternative system, which is of course Islamic finance, can offer us a possible solution. I will not touch, unfortunately, on Chinese economics because time is short, and also this is a work in progress. My next book, the one that will come out in 2009 or maybe 2010, but during the question and answer time, maybe somebody wants to ask me some question, I can answer also about this aspect of the new economic system. So, now, many people believe that what we're facing today is as serious as 1929, and in reality, it is true. This is the major crisis that Western capitalism is facing since 1929. And last week, we already saw some of the signs of the seriousness of the crisis. And I'll just mention a few of these signs. Industrial production is down, seriously down. We're talking about double-digit falls. Housing starts last Friday came out and is as low as it was after World War II. Retail is down. Consumer confidence is down. So these are all signs of a serious recession. Yet I'm optimistic, and the reason why I'm optimistic is because there are many different aspects of the economy from 1929. I mean, for example, in 1929, the trade flows were mostly from south to north, or vice versa. Today, we have trade flows that basically crisscross the entire world. Emerging economies are trading with each other, and the percentage of trade which is taking place among emerging economies is actually rising. So there is an economic system, a trading system also outside the Western system. So that doesn't mean, of course, that the recession will... Oh, right. Okay, it's better? Okay. So that doesn't mean, of course, that the recession will not be harsh. The recession will be harsh, but because of this, the alternative systems, some countries will come out of the recession before other countries, and not necessarily will go into the depth of the recession and the Great Depression of 1929. Now, so what makes me optimistic, it is the existence of this new model, and the outcome of this model depends very much on how quickly countries will realize that there is an alternative model and how quickly countries will actually embrace this new model. And this is a question that unfortunately no economist can answer. This is a question that we have to pose to politicians. So how did we end up in this situation? And let's look at the genesis of the current crisis. Now, and this is very much the topic of rogue economics. The Berlin Wall kick-started the return of rogue economics. Now, rogue economics is not at all a new concept. On the contrary, it's something that we have seen through the history of the human beings. We have seen it during the fall of the Roman Empire, during the Industrial Revolution, the crash of 1929. In times of great transformation, economics moves much faster than politics, and politics can't keep pace with the economy. And it is in these particular circumstances that the economy becomes a rogue force. Let me add something about the concept of rogue, because it took a long time to develop this concept. It's not at all related to rogue states. So it is at the same time something negative but also positive. I mean, if we're sitting here today, benefiting from this microphone that now works and the lights, is thanks to the Industrial Revolution. The Industrial Revolution was based upon the exploitation of the weak, the poor, the children, the women, and the old. And yet, look what we have. So, to a certain extent, rogue economics, it is encoded in the DNA of human beings, and it is at the same time the price that we have to pay for progress. So at the end of the tunnel, after this big crisis, we will get something that very likely is going to be better than what we have today. We just have to bear with it. We just have to live through it. Now, let's see how rogue economics actually came out again. Now, the fall of the Berlin Wall in reality kick-started globalization. It was only at that time that we could talk about a globalized market. It was when the barrier with the communist bloc came down and the Western capitalists really could expand globally. Now, this phenomenon was followed by a policy of the Fed, the Federal Reserve, that then was, of course, embraced by all the other Western countries, which was a deflationary policy. Interest rates start coming down. And if you look at the charts of interest rates from 1989 until the end of the 90s, it looks like a very steep ski slopes. It just goes straight down. Now, simultaneously, that fall of the wall doubled the workforce in the West. People from the East start migrating, but not only from communist countries, but also from far countries such as the Asian countries. So what happened was that the salaries started to fall in the West. So the return on capital was much, much higher because of falling interest rate, but also falling cost of labor. Now that means that the GDP in the West actually grew. But when you go and look at the distribution of this GDP, this is when you get the shocking figure. Now, the bulk of the growth, the actual real growth in the economy, was pocketed by a very small percentage of the population. So we're talking about the 0.1% of the population. When you look at the middle class, in particular, we're talking about the American middle class, this class actually became poorer. If you look at the salaries of the median income, which is the income sandwich between the rich and the poor, in real terms, so net of inflation, today it is lower than it was in the 1970s. So actually people became poorer. Now, why did this happen? This has nothing to do with Western capitalism. This actually has to do with the transition of the state. The state changed. The state became a market state. Before, it was a nation state. The nation state is the state that was created on the basis of stipulation of the social contract, the Rousseau social contract, which was very much 18th, 19th centuries social contract, whereby the individual renounced certain kind of liberties in exchange of protection from the states. This protection is not only protection from outside powers who wanted to invade our country, but it's also protection from the wild swings of economics. So this state became a market state. And this is not my definition, this is the definition of Philip Bobbitt, who actually wrote a book about that, where he described this transition as a transition that takes place where the states no longer pursue the interests of the community, of the population, but creates the best economic condition for the individual and the corporation to grow. So this state is intrinsically a very weak state, because it's a state that withdrew completely from the economy. Now, what is happening today, the credit crunch, is actually linked to the fact that this state did not regulate finance for 15 years. If you're looking for responsibility, if you want to pinpoint names, people, institutions that caused this credit crunch, unfortunately, you will have to look at Washington, D.C. And this is the most sad part, I think, of this story, that we can't even find who is responsible. To a certain extent, it's all of us, because we are the state. And the reason why this happened is because there was no legislation, there was no regulation, nobody broke any law. When Bear Stearns went down and he was rescued, he had a debt-to-asset ratio of 33 to 1. Now that, you would say, it's illegal. Well, actually it is not, because a week before, that debt-to-asset ratio was completely different. So this is the problem, actually, that we're facing a state that is weak. And ironically, this state today is also acting to a certain extent in a weak way by not anticipating events, but reacting to this event. This is the state that today is nationalizing banks and financial institutions, when only 7 weeks ago it would have been completely inconceivable. So this is one of the consequences. The income inequality is related to the transition of nation state to a market state. And the banking meltdown, of course, is also related to that. What this state let happen is the transformation of an unmanageable debt, because the debt was and still is unmanageable, into a growing asset, which was sold and sold and sold again on the international markets. And I think one good example is Iceland. I don't know if you have read about Iceland recently, but Iceland is a country that is now risking to go bankrupt on the basis of a debt accumulated by 3 banks, the 3 largest banks in Iceland, which is over $60 billion. Now, $60 billion is about 12 times the GDP of Iceland. Now, you would ask, well, how did this happen? How can actually a country and banks do that? Well, it is very simple. The fact is that from 2004 to 2007, so right before the summer, the assets in the portfolio of these 3 Icelandic banks went up 5 times. Each time the asset went up, these banks borrowed more money against the increase in the value of the assets. And then when we go and look at these assets are the famous toxic assets that we are talking about constantly today. Now, these assets are created by derivatives, which basically I describe as the special effects of finance. And what is the value of this asset? The value of this asset is linked to two indicators. The first indicator is falling interest rates. The second indicator is the value of the assets, which generally are properties. So we're talking about mortgages, but also stocks of financial institutions, which go up because the demand is increasing. But what is fueling demand? What is keeping demand going up? Is actually increasing debt. So comes the crunch, comes the meltdown. The asset of the Icelandic bank go down, but the debt remains, and this is how Iceland is going bust at the moment. So we can take this example and apply to any institution. Lehman Brothers, same story. Lehman Brothers went bankrupt with an asset to debt ratio of 1 to 22. A week before, when the South Korean Development Bank wanted to buy, that ratio was completely different. Which also brings me to other aspects of rogue economics. Because income inequality, the credit crunch is just the tip of the iceberg. If we go down, we see that the entire system is actually malfunctioning. Rating agencies, how is it possible the rating agency didn't tell us what was happening? Lehman Brothers went bust with the AAA rating. Bank and financial institutions don't know what they have on the balance sheet. And again, Lehman Brothers, good example. A week before he went bust, the head of the bank refused an offer of $23, per share because he thought it was too small. 7 days later, it was zero. The value of the shares was zero. So, it's almost like a bad dream. But this is our life. And finally, economic data lost completely their meaning. I mean, data is just a series of numbers. It's not any longer an indicator of wealth. So for an economist, it's impossible to understand what is going on. Imagine for a politician that doesn't even know economics. And I say this because all of this could have been predicted. There are people who actually did predict it. And I'll tell you only one indicator, just to show you that the numbers were there, it's just that they didn't have any meaning. In 2006, the rate of growth of personal bankruptcy in the United States surpassed the rate of growth of the GDP. Now, that means that the country was not growing anymore, it was going bust. This is in 2006. And yet, it took another year and a half until August 2007 for the subprime crisis to burst. Why nobody did anything? So, now we go to another interesting aspect of the market state, which is linked to terrorism, just to get even more depressed. Now, the market state is a state that has lost control of the economy. It's also a state that, because of that, has lost the idea of how the economy can have an impact upon politics and the everyday life of people. And to explain this concept, I will describe how the war on terror, which was launched by George Bush after 9/11, in reality turned out to be a total financial folly. And part of the problem of what we're facing today, not that he created a credit crunch, absolutely not, but it weakened the defenses of the American economy to deal with a crisis like that. So we all know how expensive has been the war in Iraq. Stiglitz wrote a book about that. It's about $3 trillion. But there is something even deeper than that. Number one, the declining value of the US dollars vis-a-vis the other currencies, and the progressive weakening of the dollar position as the reserve currency of the world. In other words, the dollar supremacy in the international financial market. The rise in oil prices and the outflow of capital caused by 9/11. All of these are linked to the war on terror. And let's see the number one. Now, the Patriot Act, there is a financial section of the Patriot Act, which has been very unpopular. In the financial sector of the Patriot Act, US banks and US registered foreign banks cannot deal anymore with offshore banks. In other words, this is an anti-money laundering legislation which was very much needed in the United States. However, the Patriot Act also allows the monetary authorities to monitor dollar flows and transactions all over the world. So if somebody transfers money in dollars, let's say from Kuala Lumpur to Hong Kong, then the monetary authorities of the United States will have the right to monitor that transaction. Now, you can imagine that it was extremely unpopular with international banks. I mean, who wants the monetary authority to monitor what is happening between the bank and their clients? So the reaction of the international banking system was to advise investors to get out of the dollar and invest in other currencies. In particular, of course, the euro was just right there, new currencies. It was, the currency of, part of the world that was, relatively well industrialized, good economies and so on. So we see this transition from, dollar investment to euro investment. The criminal, terror, and illegal economy did exactly the same thing, because of course, this was a legislation that blocked the money laundering of their dirty businesses. And until 9/11, 90% of money laundering in the world took place in the United States, and the currency used by the criminal terror and illegal economy was the US dollars. Now, I calculated how big it was. It was $1.5 trillion. It's about 5% of the world economy. Now, these two phenomena created a fall in world demand for dollars. And this is when the dollar starts weakening. And there is a study produced by a group of economists at the OECD. They actually track this phenomenon, and they show how the dollar started falling in November 2001. The first reaction of the market actually to the Bush war on terror was positive. So the dollar rallied after 9/11 because the idea that actually the US had been attacked was appalling to everybody. And everybody was right behind this country. But the moment in which the Patriot Act came on board, and the moment in which the intention of the administration became clear that it was not just getting Osama bin Laden, but doing something else, this is when the market turned their back, and this is when the dollar started falling. So that's the first. The second one is oil prices now and commodity prices. Now, if you look at the charts, you see that from 9/11 to about mid to late 2003, the increase in oil prices is often linked to fear of a terrorist attack taking place in the Gulf. The fear is linked to an interruption of supply, similar to what happened in 1973, 1974. In particular, fears of an interruption of supply from Ras Tanura, which were 85% of Saudi Arabian export actually reaches the West. None of these attacks actually took place, but yet the market anticipated it, discounted it, and oil prices start going up. By the time the fundamental of economics start kicking in, so higher demand coming from India and China, we were already a quota $40. Now, before 9/11, price of a barrel was $18. Simultaneously, because of what was happening, this movement of commodities up, we see a massive entry into the commodity market of speculators. hedge funds, people that had massive amount of liquidity in their hands, and they wanted to make money quickly, and they wanted a very high return. And I tell you, one interesting thing to reflect is how quickly oil prices have come down in the last 7 weeks. Now, if there was a really fundamental relationship between supply and demand, prices would not have come down so much. So it is the exit of speculators from this market that is pushing commodity prices down. Now, and the last element is capital flows. Now, what's happened after 9/11 is that the tough regulation imposed by the monetary authority, coupled with this suspicious attitude that the US had towards Muslim investors, convinced many investors from Arab countries to repatriate their funds. Now, we don't know how much actually was taken out, but some figures say 700 billion. Now, this money were moved away from the US and went partly in Europe, but the bulk actually went in the Middle East. They went in the Middle East and they were invested in the Middle East. Now, what actually was happening in the Middle East? In the Middle East, what was happening was that Islamic finance was starting to take off. And let me explain what is Islamic finance. Islamic finance comes from the desire of producing a system which is not linked to interest rate, because interest rate is considered unacceptable by the Sharia law. And we see the beginning of this Islamic finance in the 1950s. Scholars were discussing the possibility of creating a new banking system which was not based on interest rate. Yet the problem was money. I mean, none of these countries actually had any money. And let me add that none of these countries had a banking system. So the banking system that was used was the one of the colonizer who had left a Western-style banking system. It is only in 1973, 1974 that actually this idea is implemented. And it is thanks to the oil crisis, because we see a massive transfer of wealth from the West to oil-producing countries. Now, although the majority of this wealth was then repatriated, it came back to the West through the petrodollar recycling, which was a system introduced by the IMF in order to avoid great imbalances in balance of payments, both in oil-producing countries and in oil-importing countries. A small fraction of this money actually stayed in these countries and was used to fund the first banks. And then eventually Islamic finance really took off in the late 1990s after the Asian crisis. After the Asian crisis, one country, Malaysia, decided not to accept the rescue package of the IMF and became totally Islamic. So the entire system was restructured in order to be an Islamic system. And it got through the crisis thanks to investment coming from Muslim countries. Now, so to a certain extent, the Islamic finance is the product of two major crises of Western capitalism: the 1973-1974 oil crisis and 9/11. And it is almost ironic that this system could help us to get out of the current crisis. But before I get to that, let me just talk a little bit about what is the concept of Islamic finance, what makes this structure different from our system. The first point is that money cannot produce money. So this is why the interest rate, of course, is not accepted. Money have to be invested. They have to be invested in the real economy, and through real growth, they can produce more money. Now, this is not different from what the classic economists have told us. Ricardo, Adam Smith, they always thought that real investment should produce real growth, and this real growth should be monetarized in order to be shared by the people. Now, in terms of banking, and this is very interesting, I think, the concept, because there is not this interest rate, the concept is actually risk sharing. The bank and the client share the risk in whatever activities they're doing. Now, this is, I think, very unique, because if we look at what has happened in this credit crunch, the interest of the shareholders have been put ahead of the interest of the clients. This is why we ended up where we are. Merrill Lynch in 2007 distributed a bonus of $8 billion to its employees. Now, the part of the bonus, of course, is in cash. The majority of the bonus is shared, so the employees become, shareholders. And yet, Merrill Lynch that year had a loss of $15 billion. You wonder, how did it happen? Well, the thought was that, the next year they could cover the loss and they could even cover, the bonus. And it's not that they cooked the books. This is not the actual definition. But you could, to a certain extent, postpone those losses through various accounting tricks. Now, in the end, who is suffering? It is the client. Because the bank has two roles. One social, which is providing the money that are needed by the economy in order to flow, and the other, of course, it is profit. I mean, the bank should be a profit organization. But the moment in which the social role is forgotten and the profit role takes over, then a bank is actually working against the people who are putting their money into the bank, the clients. Now that, of course, in Islamic finance could not happen because there is this partnership between the client and the bank. So there is a social commitment within finance, which we had before, but we lost it through this creative finance, to this restructuring or financial engineering, whatever you want to name it. Now, so money should be put to work, and because there is no interest rate, there are other forms, of course, of instruments through which the bank can benefit from lending money. Now, for example, a mortgage is a rent to pay, the house that you are actually want to buy. So what's happened is that while in the Western system you pay the interest before you start paying the principals, in Islamic finance you pay interest, which is basically the cost that the bank is incurring in anticipating the money to buy your property, and the principal. So it is a different way of dividing what you're actually paying. But that's quite good, because if you lose your house, let's say 5-6 years through this process, you do get something back, which is part of the principal you have paid. You don't get it in our system, because in the first years, depending on how long is the life of your mortgage, all you pay is the interest. So the relationship between the bank and the individual is completely different. Now, the other thing I want to add before concluding is there is also a code of ethics which is built in Islamic finance, and this code of ethics regulates the financial behavior of the institution and prevents abuses. Now, every single product that an Islamic bank produces has to be Sharia compliant. And I know that the word Sharia scares everybody, but the Sharia is actually a religious law which has certain kind of principles, such as that you should not invest in prostitution, you should not invest in pornography businesses, you should not gamble, you should not speculate, and so on and so forth, which are very similar to the principles of the classical economics. And So every single product has to be Sharia compliant, and each time a product is produced by a bank, there is a committee of scholars and bankers who verified if this product is Sharia compliant and if this product can be used, how can it be used, and what is the best use of this product. So it is incredibly flexible because you can fund the construction of a new stadium through, sukuk, which are, the bonds, the Sharia, the Islamic bonds, or, you can buy a house, or you can fund the building of a new road, or, even you can recapitalize a bank. This is very interesting. As long as this product is Sharia compliant, so potentially you could actually use the sukuk to solve the current crisis in the West. And this is how it can happen. This crisis is a crisis of confidence. The real problem that we're facing is the fact that the money market has frozen because banks are not lending to each other. And this is why the Fed has to intervene constantly, pushing a massive amount of money into the system in order to prevent getting completely stuck. Now, 1929 happened, the actual depression happened when money stopped flowing around the system. Now, they couldn't, of course, print money at that time because it was the gold standard. So, they were tied by the amount of gold that they had in their reserves. Today, this is not happening. So what the Fed is doing is basically pumping money into the system. But we're not seeing the results. I mean, the market continues to fall. The market continues to be extremely fragile. Any bad news, Friday, housing starts, being so bad, the Dow completely crashed. So it is a crisis of confidence, and the solution is to bring back the confidence. But how do you bring back the confidence to a system like this, which is based basically on a pyramid scheme, and this pyramid is collapsing? So this is the idea. The idea is actually to make a deal with Islamic banks. There is a lot of liquidity in the world. Most of the liquidity is actually kept in oil-producing countries. This liquidity at the moment is not being used. But there is also a lot of liquidity in the West. And this liquidity is frozen because nobody knows where to put the money. Everybody is afraid. In Europe, for example, in the last 2 weeks, the demand for euros went from 7 billion to 170 billion in 2 weeks. This is people withdrawing money from the banks. And where are this money going? Now, the demand for government bonds is very high because this is the safest investment you can do. But the yield on government bonds, because demand is rising so quickly, is going down, and we are now at 0.5%, and soon we'll get to 0. That means your money are not going to produce anything. And with inflation being around the corner, it's not going to be a very good investment. So the solution could be to have our banks start marketing Islamic bonds, sukuks, linked with government guarantees from the Gulf. Now, sukuk today can give you, depending on which kind of investment it is, they can give you up to 6 or 7%. And there is a government guarantee. These are safe bonds because these countries are awash with money. They are not going bust. They are not Iceland. I know this is very shell-shocking, but to be honest, the alternative is actually not very much better. Because the truth is that if we continue to go down, if the market continues to crash, if we get this confidence in our system, we'll reach the bottom of the market, as Warren Buffett said. And then people who have cash will start buying assets. And nobody's going to stop the Islamic sovereign funds to use their $3 or $4 or $5 trillion to start buying our banks. So, I mean, I really think that we are at the junction, and this junction is, could be very positive for us. But in order for these new ideas, this is just one of the many ideas that are flowing around the world at the moment, but in order for these new ideas to work, we actually need, first of all, not us in this room, but I'm talking about the economists, the politicians, people on Wall Street, we need a little bit of humility. And the humility is to recognize that our system is not perfect. There is no perfect system. There is not perfect economic theory. Economic theory are instruments which we have at our own disposal for the economy to grow. Keynes produced a theory which was fantastic after the Great Depression, and yet it was ditched by Nixon in 1971 because he embraced the Milton Friedman theory. And to a certain extent, we are here in this crisis because of that decision. So the truth is, economic theory comes and goes, and we got to be open-minded if we want to carry on going ahead. Otherwise, we'll get stuck, and otherwise, we'll really be in a serious crisis. And then something new will come only from the ashes of what we have constructed before. So my suggestion is to think outside the box, to reflect on this, and always remember that economics is a social science, it's not an exact science, and it should be managed by politicians, not by traders, not by bankers, and definitely not by Wall Street. Thank you.
Thank you, Loretta, for a tour de force through your book. For those of you who came in, you've seen that there is a table outside where you can browse through her book and purchase one if you're interested, which we'll do after the question and answer session. I think Loretta would also be happy to sign it for you. For the questions and answers, I would ask that you maybe stand up and speak loudly, and then we'll try and repeat the question so everybody can hear, and Loretta will answer. I see one back there.
Can you explain a little bit more of Islamic finance? So the bank is not charging interest. They're lending to a client, and it sounds like there is some kind of fee they're going to pay for their cost of doing business, but where does their profit come from? If this client's project does well, they share in the profits, or?
Yeah, so basically what they do is they charge you a fee, which is a fee related to the fact that they're anticipating the money. And there is a profit sharing, depending on, of course, on which kind of business you're doing. Now, for mortgages, of course, there is no profit sharing because at the end of the day, you will own your own. So it is a sort of rent. There was in Western countries there was this figure of paying rent until you reach a certain point, whereby at that point the property became yours. We have lost it. I think in Europe there are a few places, especially if you buy property through a co-op, sometimes you can do that. So the interest rate, the figure of the interest rate does not exist. You're actually paying a fee to the bank, and you still have the multiplier in the system because, of course, the amount of money that the bank receives in deposit is then used much more in order to lend the money. So you still have the multiplier in Islamic banks as you have it in Western banks, but it is the relationship between the client and the bank which is very different.
I have seen in the Arab and Islamic publications in California advertisements for these types of mortgages, and as you said, stating the ethical principles by which these banks and institutions buy. About how much are the assets in the United States for Islamic banks, and I myself personally have sometimes been hesitant, but I have donated to Islamic charities because of the laws in this country that are very severe for supporting Islamic charities, or really anything related to Islam is looked at with such fear. And that I think that could be an obstacle today if you wanted to go to an Islamic bank and participate as you have suggested. This is a great talk. Thanks.
Oh, thank you. Thank you. There is an Islamic bank which is registered in the United Kingdom, so it is a United Kingdom bank and it is Islamic bank. There is not such institution in the US, but all the major, well, what before were investment banks and now are just regular banks, so we're talking about Goldman Sachs, well, Lehman Brothers doesn't exist anymore, Morgan Stanley, they all have branches, and I'm sure you can access investment in Islamic finance and even getting mortgages through them. But an Islamic bank independent as such as the one in the United Kingdom, no, there isn't in the US, not yet.
Yeah, gentlemen.
Very nice, interesting talk. You touched on many things I've been thinking about. You mentioned that it's not possible to look at track of responsibility, although it's all occurred here. But you just mentioned one, Nixon, going for the Milton Friedman thing. Let me suggest some others that I've thought about, and I really don't know exactly what to make of them, if I can think of them on the fly. There was Reagan's acceptance of the Greenspan solution for using Social Security funds to cover the huge deficit due to Reagan's tax breaks.
Yeah.
Okay, then there was in the Clinton administration, there was the reappointment of Greenspan. There was also Robert Rubin's alliance with Phil Gramm to repeal the Glass-Steagall Act, which actually opened up the investment markets to these speculators. I see the sharks on your book that just sort of let the sharks in the goldfish pond. And then the last thing that I'm wondering about is during the Bush administration, the repeal of the Public Utilities Holding Company Act, so-called PUCA, which actually was the thing that stopped Enron from raiding all of the various states and only allowed them to go into those states like California that had repealed all those regulations. So I really do think that there are some waypoints along there where you can actually finger some responsible parties, but it did require a lot of complicity on the part of Congress and others to permit those things to happen. So I'd just like to have the comments.
Yeah, I mean, yes, I agree. I mean, we can, absolutely, you're right. But the issue here is, who is the government? The government's us. We elect the government. See, this is what I mean. It would be nice to say, okay, you know, there are those three guys in Wall Street who actually got together and, you know, decided to rip us off, and then those guys should pay for it. It's not like that. It is us. We voted these people. We put them in that position. So, to a certain extent, it's also true that we should pay the consequences.
But there are some obstacles in the electoral process.
Oh, yeah, but yes. Yes.
Yes. Gentleman here.
Yeah, I thank you also for your very informative and very interesting talk. I really enjoyed it. But I very much wish to agree with this gentleman here that if economics is a science, even a social science, there are hard figures that can be demonstrated to provide predictive information about where we're going and what's going to happen to us. And so I ask you to comment on my perception that the economic system is toxic. It's not that the toxic acids infected the economic system, but you have a situation, for instance, where banks are dependent upon deposits, but because the working class hasn't been awarded any of the increases in productivity that it provided over the past 20 years, no one can afford to save. At the same time, the decrease in interest rates, which helped people leverage capital, meant that banks became dependent upon high rollers who were playing capital games and speculators. They could not sustain themselves on the people who were putting their funds in savings because the interest return was not so great. So these are the sorts of things that I present to you because we've got a consumer-based economy, but we're not paying the consumers any money. And then with the mortgages, I believe up until about 18 months ago, the majority of foreclosures were occasioned by people losing their jobs, suffering catastrophic illness, and etc. But at the same time, we are presented with the media saying, well, they bought too much house. And so can the science of economics be effective in the current politicized and commercialized news media system we have? I mean, what can economics do, given the fact that it has the numbers, given the fact that many people saw this coming, and yet nothing could be motivated to deflect?
Well, I think this is a rogue economy. It's not. Of course, the system is wrong. Of course, the system has gone completely astray and is working against us. I can give you many examples. When this talk was specifically about the U.S. and the credit crunch, but we didn't talk about the formation of the oligarchs in Russia. I mean, it's all in my book. I mean, the booming industry of prostitutions from 1989. I mean, the fish piracy, which is rampant. I mean, 75% of the fish we eat is actually black fish. It's either fish by the pirates or fish illegally. And we don't know. We can talk about the market matrix. We go and buy stuff in supermarkets, and we don't know it's produced by slave. Slavery is rising together with spreading of democracy. I mean, of course, the system is wrong, but an economist cannot solve the system, because this is the task of politics, and this is the problem. The reason why we are in a rogue economy is because too much importance, too much space has been given to the economists, to the bankers, to the traders, and very little to the politicians. To solve this problem, we got to get politics back in control of the economy. And in order to do that, you, the voters, must do something. Because it's not going to come from the top. I mean, don't believe that one of these guys is going to go to the White House, is going to do anything for you unless you make sure that he knows that if he doesn't do it, he's not going to be re-elected. So the voice of the people has to be heard, and unfortunately in the last 15 years people were too busy shopping in shopping malls.
Gentleman back there?
Yeah, I'd like to add a data point one more to these two gentlemen. That would be Phil Graham's 2001 omnibus bill that he passed at 11 o'clock, 11 a.m. or 11 p.m. at night with 3 other members of the Senate, where they came in and basically shut down all regulation for the securities industry.
Yeah, we'll repeat the question.
I can't hear it.
The gentleman was adding one more point to the observable steps to the current crisis, which is the omnibus bill that Phil Graham pushed through, I forget how many years ago, to basically halt regulation of financial industry.
And then I'd like to ask you one other, I'd like your opinion on the privately owned organization known as the Federal Reserve Bank and the banking.
Okay, so the question is about Loretta's opinion about the Federal Reserve, which is a privately owned institution in the Bank of England.
Okay, the Bank of England was privatized by Gordon Brown about 9 years ago, 8 years ago. Bank of England was state-owned until then. Now, the Fed was always private.
Woodrow Wilson privatized it in 1970.
Oh, okay.
For 78 years before Andrew Jackson fought desperately.
Oh, okay. So I thought the Fed was born as a private organization. Yeah, okay. Sorry, I didn't know that he had been also state-owned. What is my opinion? You know, I'm not really convinced that a state-owned central bank would be better than a private bank. It depends on what are the rules of the games. I mean, you can have a privately owned central bank, although, you know, I don't think this is the best solution, but you could have a privately owned central bank, providing that this bank, you know, follows certain kind of criteria, which are, of course, imposed by the government. Now, that's not the case of the Fed under Greenspan. But then you see the difference between the Fed under Greenspan and the Fed under Bernanke. So this is the problem of having a bank, a central bank which is not state-owned, is that depending on who is the head of this bank, the policy can change. And the emphasis on how the bank is acting in the economy can also change. So, yes, maybe the solution is to have a state-run bank, but then I can tell you an example of Italy, which, you know, the bank is state-owned, and we had a governor, which was two governors that ended up in jail because they were doing private deals with the various banks. So, at the end of the day, nationalization or non-nationalization can be irrelevant if you have a strong state that is on top of the central banks and, you know, the banking system.
Kind of two questions, comments. One is in regards to the election thing, and I know a lot of my friends, and Noam Chomsky even said something that they had a survey before election to one of the Bush-Gore elections, I believe, and a large percentage of America didn't actually believe there was an election going on. There was something going on where you got to pick between two people, but it wasn't a real election. So I agree with you that the government represents us, but as far as it being a total election, I don't necessarily agree. And then I wonder about people visiting third world resorts, developing nation resorts, and if that opens their eyes at all to these kind of rogue economics, and what is your opinion on? If you go to Acapulco, there's no way to get to the resorts without driving through a lot of stuff that's making you going to question where your clothes are coming from and stuff. And I'm wondering if people forget about that when they get back to the States, or what you think that interaction is like.
Well, the election, I know what you mean about Chomsky. Well, I do think that we cannot hide behind the fact that that part of America we don't agree voted for these guys. I don't think this is acceptable. This is a democracy, so whoever is elected is reflecting also our vote. And if we don't like it, we should do something about that. We should demonstrate. We should be active. We should. I don't see this happening.
Yeah, but
let me finish. There was an anti-war movement going around the world. There were, so 3 million people in the streets of Rome. Never seen anything like that. Not even at the height of the 1970s demonstration. And then we start a war in Iraq, and everybody disappears. Everybody goes home. What's the point of having an anti-war movement when the war starts and everybody goes home? So, I think the momentum was there, and that momentum should be kept. And if that momentum did not really materialize in a world movement, that means that people were happy borrowing money and buying things. So now maybe is a good time for people to wake up, because the economy is eating their wallet. It's very sad, but maybe this is what we need. But I do think, I'm one of the people, of course, I do think that it is also our responsibility. We should do more. We don't do enough. And about people not knowing that products are produced in countries where, of course, there is slave labor. Well, I'll just tell you what's happened to me 2 days ago in Santa Fe. So I thought that was quite good. Since I wrote this book, I check origins of products, origins of food. Everything is checked. So I saw this material that was sold in a stall, or a very big stall, run by Native Americans. It was a Native American material, and then I looked, and it's made in India. So I said to the guy, "Excuse me, how is it possible this is made in India?" And of course, the guy comes and he says, "Well, I'm a textile teacher. This is designed by us. This is, reproducing an original design of Native Americans, blah blah blah. And I produce it in India because otherwise it would cost $600 to produce it here." And I said, "So what is the point? I mean, what is the point of selling something that costs $150, which is not Native American, because it's made in India?" And he said, "Well, but we couldn't possibly sell this for $600. Nobody would buy, so we produce it in India." And I said, "Well, don't you know that people in India are exploited producing this thing?" And he said, "Well, yes, but what am I supposed to do?" So here we are, right? And he was trying to convince me that what he was doing was a good thing. So the truth is that we got really very comfortable buying these things which are cheap, without even thinking that this is not the real thing. We are so much into these copies, we have forgotten what is the original. The original is unique. If I buy something that is produced by Native Americans, it's unique. It's their product, it's their thinking, yes, their culture. That's what they call the aura. That's all gone. All we buy is, cheap replicas. And then, we complain about the Chinese. We are the first Chinese because we are the one who are buying all these products. So I think the two questions are very much related. We got to wake up.
Gentleman here.
One thing you haven't commented on, and people may or may not agree with, in addition to importing from third world countries to achieve low cost of labor, we achieve it in this country by prison labor, where corporations contract with prison systems in various states to have so much produced, and the prisoners are paid. It is in effect a form of slave labor that goes on in this country on quite a large scale. So, I don't know how you combat that, because it clearly will bear the label "made in the United States." It's just a question of which prison system is making it.
Well, the prison system in the United States is, we can write lots of books about that. But this thing that you just said made me think about, the film Gone with the Wind, when Scarlett O'Hara is employing all these prisoners, and of course, her husband says, "Oh my gosh, what are you doing?" She says, "Well, they're cheap, so why not?" Yeah. But this is the ethics. You see, this is where the ethics kicks in. Certain things should not be done because it is unethical. Because a civilized society should not do certain kind of things. That doesn't belong to civilization.
It sounds like one of the things that would be a positive scenario is instead to create a symbiotic relationship where both parties, they both benefit from the production of, say, a $600 genuine Native American rug, that there happens to be a symbiotic relationship where both parties are not injured and both benefit. How do we recognize this? How do we get people to be able to recognize this? And how do we make it important to them?
I'll quickly repeat the question. The question was, it seems obvious that one of the possible solutions is to create a symbiotic relationship between a buyer and a seller where both profit or are better off. And the question is, what kind of steps, to summarize briefly, would get us there? What is necessary to get us there?
You mean partnership between the buyer and the seller? So no. So sorry, I didn't understand. You're talking about how you can reconcile the $150 Native American material made in India and the $600 original. How can you have both on the same market?
How can you make it so that a consumer has more incentive to buy the $600?
Oh, okay. Sorry, I didn't understand. It is down to the consumer, to be honest. It's not something that you can do. Of course, if you have an $150 rug and $600 and they look identical, but one is made in China, many people will buy the $150. Now, this is also related, I think, to this consumption, this desire to consume constantly. Because the truth is that if you really want that product, because that product has that aura, so you're taking part of the history of the Native American by buying it and putting it in your home, you will save money in order to buy the original, which means probably you're not going to buy other things. But we live in a society where we're constantly bombarded by messages, buy more. So it's very much quantity and it's not quality. I mean, the amount of stuff that we have that we never use is astronomical. And the same thing is with food. We throw away most of the food we buy because, we buy large quantities. So I think the consumer has to be re-educated in order to appreciate things that have a real value and to stop wanting things that actually do not have a real value, which are replicas, we have no really meaning. It's like, why do you buy a fake Gucci bag when maybe the original is much better than the fake, but you will have to save money in order to buy. Nobody saves anymore to buy things. I don't know anybody that actually saves in order to buy things. So
if we move to the Islamic banking system, will we be forced economically to save money so that we can make payments because we don't get loans?
Question was, if we go to Islamic banking, will we then be forced to save because you can only get a loan if you put some of your own money down?
Well, my idea is that people that want to buy houses should not be given a loan without putting a little bit of deposit. This is nothing to do with Islamic banking. This is actually good banking. And you should never give people money unless they give you collateral. That's bad banking. Islamic finance actually does not necessarily require that because the truth is that, as I said before, you are in partnership. Of course, people do put a deposit, but it's not as high as the deposit used to be before 1989. I mean, when I bought my first house in early 80s in London, I actually had to put down 40% of the value in order to get a mortgage. So that was a lot of money. I mean, today people can buy, not today, sorry, today nobody can buy. But until a year ago, you could get 105, 110% mortgages only on the basis that you had a job. That's bad banking.
Gentlemen, you had another question?
Yeah, your ideas are so stimulating and engagingly spirited that it makes me want to challenge you a little bit. No, I really enjoy your talk and appreciate the points you brought out. I'm going to buy your book, so I expect to learn a lot from it. But we better understand the disease before we spend too much energy applying the wrong cure. If we live in a democracy, I must say, I think it's a very fast waning crescent moon. And to give you an example of it, the Commission on presidential elections, they control who will debate. They control the questions that are asked. And to just give you a good example, McCain is saying that Obama wants to redistribute the wealth. Why don't we hear a challenge coming back? Well, what is a $700 billion bailout if it isn't a redistribution of our wealth to those guys who are already very wealthy that have messed up the whole show? And so how do we, I mean, I voted. I hope everybody here takes advantage of early voting. Get out there and vote, for gosh sakes. But the fact of the matter is that this control mechanism is moving farther and farther away from us very rapidly. And so I'd like to find some solutions.
Well, I was thinking about the civil rights movement, which is very much a feature of history these days. How did this start? The civil rights movement started because people wanted to be recognized as citizens, and they wanted their rights to be recognized. This could be a civil rights movement of the taxpayer. I mean, that a few weeks before that proposal, the bailout, the Congress voted the new budget for the Pentagon for the next 12 months, which amounted to $700 billion. And nobody said anything.
Right.
They went straight through, fine. Yeah. It's, funny enough, it's the same amount of money that was needed for the bailout. And the bailout didn't pass the first time, so we had a massive crash of the market. So really, it's your money. Luckily, I am not a U.S. citizen, so I don't pay taxes in this country. But my taxes are going to bail out the banks in England anyway. But it is your money, so you've got to do something. And if the civil rights movement could take shape, why can't the taxpayer civil rights movement happen? But people have to get to a certain point that they really can't stand it anymore. Then they will start being active. And I don't think we're there yet, but we'll get there very soon.
I think we have time for 2 more questions. 2 people had their hands up. This gentleman here, well, maybe 3 more, and then one over there, and then I'll pick one of you guys. So please go ahead, sir.
You seem to have so much trust in politicians. We don't. We know they're paid off by campaign contributions or whatever you call it. How can you have confidence in that? But now politicians to change.
Yeah. Well, otherwise I'll be like, my friend Chomsky. he has a completely opposite view. I do, because if we don't have trust in politics, then, what are we doing here? I mean, let's face it, politics is our life. And the fact that it has been manipulated, the fact that we have a system that has completely distorted our voice doesn't mean that politics is actually wrong. I mean, I use in the book a lot of Hannah Arendt, the German philosopher, and I think she's fantastic because, I mean, this is a woman that actually survived, escapes, of course, the Holocaust, came to America, and she was so optimistic. I mean, if you read her writings, and she lost everything, of course. Imagine, coming from, Nazi Germany, and writing about how politics is part of our life, how, she talks about the desert. She said even in the worst of the desert, there is water underground, and eventually that water will come out. And this is basically how politics can come back to the people. So I am very optimistic as she was, because otherwise we should give up everything. I mean, otherwise, we regress to the state of nature of Hobbes, where everybody will fight each other, which is very much, the idea of the sharks in Wall Street, because these guys do not believe in politics. And this is why they've done. Yeah?
Question from back there.
Thanks for the talk. I have a few questions for you. Coming from Malaysia, for better or for worse, I'm Malaysian, and I've understood all the reasons that you brought up regarding the Islamic banking, but I don't think that's the whole story. And anyway, my question to you as an economist, if you were to be in partners with the Islamic banks, in Muslim countries, Malaysia, Arab nations. It seems that we are going to be partners with them, and we give them a say on what should be invested, or what is good and what is not good. And the Sharia laws and how they are being interpreted is being done within this Islamic Council, essentially. And as an economist, how comfortable are you with that idea? And second thing is that it seems that Malaysia weathered the Asian economic crisis because we buffered our economy from the rest of the world. We didn't allow foreign investment to leave the country and everything. And also we had oil reserve. And it seems that what we do now, if we were to be in partnership with the Islamic banks, we would actually invest in oil economy. That's how I look at it. Not, mainly oil economy. And what happens if the oil reserve depletes? And then the whole issues came up. Labor exploitation in third world countries, and how would the Islamic laws would explain, or how would they govern certain decisions, especially when certain things about Islam, they actually tend to favor Muslims over other people. So, I'm from Malaysia, so for better or for worse.
Islamic finance is not the solution to the world problems, that's for sure. So what I said is that we could use that instrument of Islamic finance, in particular the sukuk, and then of course we will have to adapt it to our system. That doesn't mean that we're going to invest. Anyway, we have no money to invest. We need money to come to us. So we're not going to invest in Malaysian oil revenues or Malaysian oil economy. About what you said about the Asian crisis, actually what Malaysia did was refuse the IMF package, because the IMF package was basically unacceptable, and the country they accepted got into even more serious economic troubles. So from that point of view, that was very courageous, and it was a great innovation. Now, the Malaysian economy suffered tremendously because they actually had a negative rate of growth for a few years. And what kept the economy going was actually money coming from the Gulf, mostly, to be invested in an economy that actually had a negative rate of growth. There was that kind of solidarity that, of course, was the first time we've seen it. In the long run, that was a very good investment, because these guys actually had a very high return. That's a very good example of thinking outside the box, meaning you don't go with the IMF package, but you produce something else. Now, Malaysia could do it, Thailand could not do it, Indonesia could not do it, because Malaysia had an embryonic Islamic finance already in place. So what they did was to expand it. But in relation to the Muslim, Malaysia has problems between the Malay, the Muslim. There are social tension, of course, So I understand your point. But the idea is forget about the religion, forget about, if you meet these scholars that actually they give the okay to Sharia compliant products, these guys are not, the mullahs from the Taliban. These guys are actually very smart financiers. So I don't think that the religious element is going to play a negative role.
And the lady over there, you had a question.
Yes. You mentioned that a new economy is going to rise from the ashes, and I just wondered if you could talk a few ideas that you might have of what this economy would look like.
Well, yes. What I think what's going to happen is that there is going to be a new social contract, which has been mentioned in the introduction. And the new social contract is going to be stipulated mostly by Chinese and Muslim, because of Chinese economics being the new model in the real economy, and Islamic finance being the alternative model to finance. And the two will naturally merge, because Islamic finance does not have a sufficiently developed real economy, and Chinese economics doesn't have a sufficiently developed financial sectors. So it is natural that these two would merge together. But also we're seeing some of this activity between the two taking place in Africa. I mean, this is the continent where most of their investment is taking place, because Africa, of course, is very rich in resources. And this is where you also see a new economic development model coming out, which has nothing to do with the one of the colonization model. The colonization model, Western style, basically subordinated the economy of the colony to the economy of the colonizer. This is not what the Chinese are doing. The Chinese are going in, they're building certain kind of infrastructure to make things easier for them to take the resources. But they are not interested at all in colonization, because they have understood that colonization actually doesn't pay back. I mean, it ends up being today an economic effort which is not worth it. So you go, you do business, you build infrastructures. These infrastructure, of course, are not of high quality standards, but the idea is that the horizon of the economy has got shorter and shorter. And even Keynes said, who cares about the long run, because we're all going to be dead. So it's all about now and the short run. So I think this is what is shaping, and this crisis is affecting these economies, emerging markets, negatively. I mean, we see that there's been a big crash in these markets. Some of these markets are in serious difficulties, but they will weather the storm better than we do, because they are actually growing. So there is a need of investment in real infrastructures. There are resources to be used, while we are in a post-industrial society. Our strength is consumption. It is. So we are in a completely different situation.